Next theory is about payer and receiver. See, payer means in every transaction, there is one person who makes the payment, so I am calling him as payer. And the person who receives the income is called a receiver. Now see, for payer and receiver, what you need to learn? Look here. Look at this chart. In fact, this drawing. In this drawing, what I have written? 1, 2, 3. Basically, in this 1, 2, 3, I am trying to say whether TDS is applicable or not. It depends upon three things. Without checking three things, you cannot decide TDS is applicable or not. Can you guess what three things you need to check? First, you need to check the nature and size of the payment. Means, is it CD Vakraf CP or something else? Nature. Size means whether the amount is crossing 10,000, 20,000 or not, or it is below the limit. So first thing what you have to check is the nature and size of the payment. And in nature and size, what you have to check, that I have already explained. The nature of the payment should be CD Vakraf CP, and the size means the threshold. So one thing I have taught you. Now second thing is you also have to check the type of payer. And third, you also have to check the type of receiver. And after checking all three things, we decide whether TDS will be applicable or not. Okay. See, let me tell you, this theory is very important because in exam what they ask, they will give you situations and then they will ask whether TDS will be attracted or not. And the way of answering such questions is check three things. What three things you will check? First, you will check the nature and size of the payment. And here what you should check for, there should be CD Vakraf CP type payment. Then only your answer will be positive. Yes, TDS will be applicable. But don't just decide based on one thing. You will also check the type of the payer. You will also check the type of the receiver. After checking all three criterias, you will decide whether TDS is applicable or not. And accordingly, you will answer the question in exam. Now see, what you have to check in payer, what you have to check in receiver, that is my next theory. See, that's what I written here. Payer and receiver, type of payer, type of receiver is important to decide applicability of TDS. Now see, here you will find one chart which is relevant for payer. Here you will find one chart which is relevant for receiver. Slowly it will be revealed, but one by one I will show. So first, in payer, what you have to check? Read this chart. Out of all these sections which I have taught you up till now in CD Vakraf CP, if the section is 194 R A C H I J, which I call it as Rachis. Rachis is a way to pronounce. Actually, it is a section number. 194R. See, 194R has not yet come in my discussion. Soon it will come. If you remember last lecture, I told you that TDS sections doesn't end at 194L. After L, there are other alphabets like M, N, O, P, Q, R, S, T. Okay. So there is one section R which will come later. But other than R, what are the other sections which you can see? 194R, A, C, H, I, J. In short, these sections 194R, A, C, H, I, J. In these 6 sections, if the pair is individual HUF and if it is a small individual HUF, then there is no need to deduct the TDS. Even if condition 1 is satisfied. What is condition 1? The transaction should be of CD Vakraf CP. It should cross a particular amount. Even if condition 1 satisfied, the moment you realize the pair is a small individual HUF, your answer should be TDS not applicable. But this is only in case of section 194 Rachis. How to remember? 194 Rachis. Say Rachis. Okay. But for other section, it doesn't matter who is the payer. Whether the payer is individual, HUF, company, partnership firm, LLP, TDS is always applicable irrespective of the type of the payer. Why? What is the logic behind this rule? I will tell you. But these provisions are there in the Act. In fact, see, in the Act, they have not given a chart like this. I have directly given you a summary. In the Act, it is given in such a horrible manner. Act is actually given section wise. But I have made a good analysis out of several sections. The analysis is what you know, whichever section you study in TDS. If it is Ranchi's section, there is one special rule. What is the special rule? If the pair is individual HUF, that too a small individual HUF, TDS will not be applicable. Okay. Now tell me what is the logic behind this? That if the section is 194 Ranchi's, small individual HUFs are exempted from TDS. First, you know what is small individual HUF? Individual HUF who either does not have any business, he should be a salaried person, or even if he has a business, his business is so small that his turnover in the last financial year did not exceed 1 crore. And if he is a professional, his gross receipt did not exceed 50 lakhs. This is the meaning of small individual HUF. See, law does not use the word small individual HUF. This is my way of communicating with my students. Okay. So what is the meaning of small individual HUF? Either a person is not having business, he should be a salaried person. See, once you are salaried, you are always called small. Although your package, the salary which you are earning might be 5 crores. Once you are salaried, you are called small individual HUF in the provisions of TDS. And if you are a businessman, your business should be such that your turnover in the last financial year should not be more than 1 CR. And if you are a professional, your gross receipt in the last financial year should not be more than 50 lakhs. Then you are called small individual HUF. And what is the benefit to small individual HUF? They are exempted from deducting TDS under Ranchi's section. Why? So see, generally when I ask the question why, most of the students will answer, you know what? Yes, because small individual HUF, government doesn't want to bother them. Because deducting TDS will increase the compliance burden. Tell me why TDS is said to be a compliance burden? In my last lecture, what did I say? Cutting the TDS is not a problem. After cutting, you have to deposit by 7th of next month. And there if you delay, you have to pay interest. And in case you forget, you have to pay penalty. In extreme cases, you might have to go to jail. And person whose TDS you deducted, you have to take his PAN number. You have to issue him TDS certificate. And every year you have to file 4 quarterly returns. See, this I told you repeatedly in the last lecture also. And these points actually I will explain in detail later also. Right now I just want to say that so much of headache is there when you have to deduct TDS. And government doesn't want to bother small individual HUF. Because see, small individual HUF is already struggling to grow his business. And in such situation, if government puts lot of compliance burden on him, it doesn't sound good, na? That's why government has exempted small people from the TDS compliance. See, this even you guessed this reason. But can you tell me why this provision is there only in Ranchi's section? These students are not able to guess. See, when I ask my students that why small individual HUFs are exempted from TDS, everyone will guess properly because government wants to relieve them from the compliance burden. So that is accepted. But then why under section Ranchi's only? If government wanted to relieve small individual HUF from the TDS burden, they should have exempted them under all sections. But if you see the bare act, only under 194 Ranchi's they have exempted small individual HUF, not under other sections. He got it right. See, in other sections, generally you will find the payer is a big man, he is a big shot. And once government knows that his payer will be definitely a big shot, so government didn't even think of exempting small people. See, you will also agree, if you analyze each section deeply, all other section other than Ranchi's, the payer who is making the payment is a big man. Small individual HUF possibility is there only in Ranchi's. See, Ranchi's are such sections where small people also make the payment, big people also make the payment. You know, these are general type sections where all types of payer may be involved. So government felt that since all types of payer are involved in Ranchi's, it's better to exempt small people. But in other section, you will also check and realize that yes, in other section there are no small people making the payment. See, I will make you check once. Look here. I am making you check which section other than Ranchis. Other than Ranchis, see, this is not a Ranchis section. So tell me in salary, who is the payer? Boss. And boss who makes salary payment of more than basic exemption. He is a big man. Why should he be exempted from cutting TDS? Then in 193, interest on security. Who pays interest on securities? Big companies. They are already big people. See what we are analyzing, other than Ranchis, all other sections are such where the payer is a big person. Like see, even this was not there in Ranchis. But this is dividend. In dividend, who is the payer? See, don't check the receiver. Don't forget I am doing the theory of payer right now. So figure out the payer. See, dividend receiver can be a normal shareholder like us also. But who is the payer of dividend? Companies. And companies, do you think they are small people? They are big people. So see, other than Ranchis, whichever sections are there, the payer is automatically a big man. So why to exempt them? It is only in Ranchis you will find small people are possible. Like see, I'll take randomly one or two examples from Ranchis. Like in Ranchis, what is H? In Ranchis, there is one section 194H. 194H, you can check it is from the family of Ranchis. So let us see what is 194H. 194H is other commission. Now, you will also agree, other commission is such an item where small people also make the payment, big people also make the payment. Like see, other commission, even we people make the payment to estate agents, brokers while we purchase some flat or we take the property on rent. We have to deal with estate agents. And even Ambani's, Reliance, Infosys, they also have to deal with brokers. So 194H is other commission in which every type of person has to make the payment. So that's why small people are exempted. But what about 194 DNG? Insurance commission, lottery commission. Who are the payers? Insurance commission, insurance company pays. They are big people. That's why it is not in Ranchis. Ranchis covers 194H. It doesn't have 194 D and G because under D and G, the payer is a big man. What is 194 G? Lottery commission. Who pays lottery commission? State government. State government is a big entity. Anyways, I will not show you each and every section detail. It will waste our time. Believe me, Ranchis are the only sections where there is possibility that small people make the payment. See, I am not saying here only small people are there. Ranchis covers small payers also, medium payer also, big payer also. These are day-to-day transactions where everyone can fit. But government doesn't want to bother small people. That's why they are exempted. But all other sections, the payer is automatically a big entity. So they have to deduct TDS. Okay. See, what is the moral of this, In exam, the moment you see Ranchis section, you should be alert. Alert on what? Check if the payer is by chance a small individual HUF, your answer should be TDS not applicable. And they will not directly write small individual. They will give you hint by talking about this turnover of the last year. What should be the turnover? It should not be more than 1 crore. And if he's a professional guy, his gross receipt should not be more than 50 lakhs. That hint they will give. And once you see he's a small individual HUF, immediately your answer should be TDS not applicable. I'll give you one instance of how students get fooled. See, in some exam they are given like this, payment to works contractor. Payment to works contractor. What is the threshold limit for works contract? Single payment more than 30,000, aggregate more than 1 lakh. Remember that, na? So, in one exam they gave, payment was made to a works contractor and the amount paid was 7 lakhs. Means single payment itself was 7 lakhs. And many students, looking at the figure of 7 lakhs, they get flat. Oh, 7 lakhs, TDS, 194C. 194C was a section, na? They get excited. And they write also, TDS will be applicable because the amount is 7 lakhs. These students, what mistake they are doing? They are only checking one thing. Which thing? Nature and size of payment. He saw the nature, works contract, size 7 lakhs, he got excited. But that's the mistake. You should also check the payer, especially if the section involved is Ranchis. And I give example of works contract, which is 194C, which is from the family of Ranchis. So you should be careful. And you know, in the exam, what they gave? Somewhere in the corner, they wrote the person who made the payment to the contractor was not having a turnover of above 1 crore in the last financial year. So this makes you feel that he is a small individual HUF. Then what should be a conclusion? Although the payment is in the nature of works contract, although the size of the payment is 7 lakh, still TDS will not be attracted because the payer is small individual HUF. In exam, don't write small. Huh? You have to write his turnover in the preceding financial year does not exceed 1 crore, like that. In short, I was just telling you the importance of don't just check point number 1. Point number 1 means nature and size of payment. Because this is a way to create the question. Give a nature of such payment that students get carried away. Okay. But you should always check the type of payer. Now see, in Ranchis, can you see C and J has special star? So look, what is why the 194 C and J? C is 194 C is works contract, payment for works contract. 194 J, partner director. Remember the keyword? Professional service, technical, non-compete, royalty and director's fees and remuneration. You know, under these two sections, sometimes even if you are a big individual HUF, TDS will not come. Right now, see what did I say? If you are big individual HUF, TDS comes, na? Who is excluded? Small. But big people, they have to deduct TDS. But under 194 C and J, even big individuals and HUFs are exempted if the transaction is personal in nature. If the transaction is personal in nature. Why? See, why part I will explain, but did you understand the point? The point is what? Under C and J, small people will anyways not deduct TDS. That small people exempted is in the whole list of Ranchis. But what is so special in C and J? Under C and J, even big people means big individual HUFs are exempted, provided the transaction is personal. In short, if the transaction is personal, neither small people will deduct TDS nor big. All are anyways exempted, even big will be exempted. Why? Like see, for example, there is one person, he is very rich. His turnover is in multi crores. I am trying to show he is a big man. Huh? And he is consulting a lawyer for divorce matter. He is planning to have a divorce with his wife. And for divorce matter, he is consulting a lawyer. And he is a big man. Big man means, I am trying to say he is a big means what? His turnover in the last year is above 1 crore. And currently he is consulting a lawyer for divorce matter. So when he makes payment to lawyer, it becomes a payment for professional service. 194J comes to your mind. But since divorce is a personal matter, TDS will not apply. Why? Because see, no one likes interference in their personal life. Just imagine a person is so much in tension of divorce, personal life is totally disturbed, he is already into the tension and the pressure of divorce, running here and there behind lawyers. And here if government says, don't forget to deduct TDS, it hurts. See, if I am doing some business transaction, then I will deduct TDS. Because when I have to do so much of work for my business, I will do something for government also. But when I am doing something in my personal life, please don't interfere in my personal life. This is what we also expect. Na? So keeping that in mind, government said, okay, we will not interfere in your personal life. In your personal life, whatever goes on, let it go on. No need to worry about TDS. Keeping that in mind, personal transactions are exempted. But you know what is a mistake in the law? This rule they have made only in C and J. Logically speaking, in all the items under 194 Ranchis, this rule should have been there. Should have been there. You don't act over smart in exam. What will you do? You will use this knowledge only if the section is 194 C and J, and if you say it's a personal transaction, answer TDS not applicable. But ideally speaking, this rule should have been there in all sections. Like see, let's take another example, 194I. Means I will try to show that just like 194 C and J can have personal transaction, other sections can also have personal transaction. Like what is 194 I? Rent. Many times you pay rent in your personal life, your personal house. Then 194 A. Even this is from Rachis, R-A-R-A-A-A. Even this can become personal. Interest on loan taken for my son's marriage. My son's marriage is personal. For that, if I have to pay interest. See why I am talking in the tone of pay. This chapter you have to think from payer's angle. So even interest can become personal. So logically speaking, wherever personal transaction possible, there should be exemption from cutting TDS now. I'm just trying to say my opinion. But anyways, my opinion doesn't matter in front of law. What will you do in exam? Only if the section given in the question is C and J, you can write TDS not applicable because the transaction is personal. Rest all section, even if the transaction is personal, no need to care, TDS will apply. This is little illogical. That's why I was trying to say that I don't agree with this concept of the law. But anyways, we cannot change the law. We have to accept the law. So tell me finally, the theory of pair is done. Okay. See, best way to remember is what you know. Only in the question, if you find Rachi's section, then only you take care. Otherwise, see, for other section, see what I have written. Pair, any person, TDS will apply. So TDS will always apply. So you don't have to care a lot. Na? Care should be taken if the question is on Rachis. See, Rachis R you don't know. What is A? Tell me fast. 194A, interest other than interest or security. 194C, works contractor. H, other commission. I, rent. J, professional, technical, service, non-compete, royalty, director's fees and remuneration. Okay. Now, in receiver, you know what you have to check? Look here. Imagine I am the payer, look, and you are the receiver. Only if the receiver is resident, TDS will be attracted under CD Vakraf CP. CD Vakraf CP. CD Vakraf CP. CD Vakraf CP. So what did I say? Only if the receiver is resident, then only TDS will be attracted under CD Vakraf CP section. That means if the receiver is a non-resident, then also TDS will apply, but under different sections. Right now, which sections I taught you? 192, 193, 194, blah, blah, blah. Under these section, TDS will come when the other party is a resident. So, I am not trying to say that if the other party is a non-resident, TDS will not come. TDS will come, but under different sections. What is the logic behind this? In short, see, first settle this rule, then I will tell you the logic. That if the receiver is resident, then TDS will come under these sections. These means CD Vakraf CP, CD Vakraf CP, CD Vakraf CP, CD Vakraf CP, these sections. But if the receiver is NR, then TDS will come under different section. Like see, I explained about works contract. So if works contract payment is made to resident, then this section 194C. But if works contract payment is made to non-resident, then different section. Transaction is works contract, but receiver matters. If the receiver is resident, then I will quote from CD Vakraf CP precisely 194C. But if the receiver is NR, then I will say no CD Vakraf CP, different section. Why? See, eventually when TDS has to be deducted, why the hell different section? See, whether the other party is resident or non-resident, TDS is applicable. Na? What is the only difference? If resident, sections from CD Vakraf CP, NR, different section. Why different section? Because for NR, government wants every transaction should be subject to TDS, not just CD Vakraf CP. Okay, and why? Because non-resident doesn't stay in India. So government wants to make sure every income which goes out should be after TDS. See, resident people, they stay in India. So if they don't pay the tax, we can recover from them in India. That's why in resident transaction, only selected items subject to TDS. Which items? TD वगैरह CP. But when you're dealing with NR, keep in mind the money is going out of India. And if non-resident doesn't pay tax, how will government track? Government is not able to track the people in India. How will government track people who are abroad? So that's why for non-resident, government mentality is what not just CD वगैरह CP. Every income should be subject to TDS. One more thing. In CD वगैरह CP, TDS is at ad hoc percentage. What is ad hoc? Ad hoc means it's not a real tax rate. Tell me, are these the real tax rates? Real tax rate is slab rates. And for companies, partnership from 30%. But do we deduct TDS as per the real tax rate or just random percentage? It's a random percentage. We call it as ad hoc. Ad hoc means not real. So see, for resident people, government prefers, okay, resident people are of India only. Just deduct 10%, 2% randomly. But if you are dealing with NR, TDS should be cut at actual rate. That means if you are dealing with a foreign company, foreign company's tax rate is 35%. TDS should also be at 35%. See, what I am trying to convince, for non-resident people, government has a different mindset. That's why different section. See, I am trying to justify why different section when you are making the payment to NR. So why? Two reasons I gave. Reason number one, for NR, government wants every income should be subject to TDS, not just CD वगैरह CP. Second reason, for NR, government doesn't want this ad hoc 10%, 2%. Government wants TDS should be cut at actual rate. In my Hindi batch I say, NR जिस rate से taxa जाएगा, उसी rate से काटा जाएगा. This slogan will always help you the moment you see in the question NR. See, right now I am talking about receiver. Huh? See, don't just listen to RNR. Who is RNR? Receiver party. But many times in the question, in pair they try to play with you. Resident, non-resident. This is where a student is caught. See, in pair, please don't bother whether resident or non-resident. In pair, what you have to just bother? Small individual HUF, Rachis, no TDS. That's it. But paper setter, he wants to fool you. So even in pair, he will create a situation. He is a non-resident. Huh? Your answer should be, so what? You're talking as if it's a big thing. Let it be non-resident. In pair, we just have to figure out Rachi, small, big, etc. Okay. Yes, in receiver, it matters. What it matters? Whether he is resident or non-resident. If resident, TDS will come under CD वगैरह CP. If NR, TDS will come but under different section. What are those different section? Look, what are those different section? I will not teach now. There is a different chapter, NR taxation. After TDS, our next topic is NR taxation. And in that chapter, you will learn which are the different sections for NR. See, I have made one good distinction here. Look, payment to means he is the receiver. Huh? So tell me, if the receiver is resident, then what? Non-resident, then what? In my communication, what distinction you learned? When you means, see, I am making payment to someone, say Mr. X. Now, if Mr. X is resident or non-resident, what difference it will make? So see, if he is resident, then TDS will come as per CD वगैरह CP section. And if he is non-resident, then different section. And in that family of different section, main section is 195. That is the main hero. Different section means there is a group of section, but in that group, who is the main hero? 195. Then another distinction, when you are making payment to a resident, only selected payment subject to TDS. Which one? CD वगैरह CP, selected items. Logic, resident people stay in India. Why to cut TDS in every income? If he doesn't pay tax, we can catch hold of him. He stays in India only. is traceable. But when you're dealing with NR, we cannot expect that he will pay the tax. What if he doesn't pay? How will we trace him? That's why TDS on all payments. Some more distinction. Can you guess? Which I didn't even say up till now. When you're dealing with resident, this point I said actually, TDS is at ad hoc percentage. But when you're dealing with NR, TDS is at actual rate. What was the dialogue in Hindi? NR जिस रेट से टैक्सा जाएगा उसी रेट से काटा जाएगा. The rate of tax is the rate of TDS. Okay. Then in resident, when you're dealing, there are some threshold limits. Threshold means if you are giving dividend, about 10,000 TDS will come. Works contractor, single payment more than 30, aggregate more than 1 lakh. So there are some threshold limits, correct? But when you are dealing with non-resident, no threshold limit. There is no concept of threshold limits. Why? Because non-resident, we don't want to leave him. Even he gets income of 5,000 from India, make sure TDS is deducted. It can be anything. All payments are subject to TDS. And there is no concept of threshold limits. Then, one more distinction. When we are dealing with resident people, and if it is the Ranchi section, small individual HFs are exempted. Na? But when you are dealing with non-resident, no one is exempted. See, basically what I am trying to convey, in non-resident matter, law is very strict. See here, for resident transaction, small individuals are HFs are exempted but not in all sections, only in Ranchis. But there is some concession that if you are small individual HF, no need to deduct TDS. That concession is there, na? But that is when you are dealing with resident people. But if you are dealing with a non-resident person, then you cannot gain sympathy. I am a small individual. Whoever you are, TDS will be applicable. See, no one is exempted. See, if this clarity is there, your fundas will be completely clear. You know, in exam, this distinction will never come. Neither institute has given such distinction. But you know, this gives a full clarity. Because I have realized in my past teaching, TDS, after that another topic when I teach NR taxation. This both topics when a student study, many students who have not studied fundamentally, they find it messy. You will never even experience the mess. I promise that. But appreciate the fact that there can be a mess. But if these things are very clear, you will be sorted. Okay. See, one more thing. Right now what I was saying, if you are dealing with non-resident, TDS provisions are completely different. Because with non-resident, government doesn't want to take chance. That's what I said. Huh? So actually in my communication I was saying non-resident, but actually it is non-resident as well as foreign company. See, whether you deal with a foreign company or non-resident. You know why foreign companies separately mentioned? Foreign companies means companies incorporated abroad. They may be resident also. A foreign company can also become resident rarely. How they can become resident, this I will explain later. But right now what I am trying to say, once the company is a foreign company, it doesn't matter whether they are resident or non-resident. They will come on this right hand side column. But that is if you are a company. What about individual partnership, etc.? Only if you are non-resident, TDS will be subject to different sections. Okay. So see, this distinction is like this. On left hand side, which people are there? All residents but not foreign companies. And on right hand side, which types of people are there? Foreign companies, and if not company, individual HUF, partnership, then they should be NR. And what difference it makes, I have made it totally clear. Here some student has a doubt. So small individual HUF exempted, this is the rule in pair, na? See, that rule is in pair that if the pair is a small individual HUF exempted, but that is only when you are transacting with the resident. Means see, a pair has made payment to some resident. Then you use that knowledge, oh, pair is a small individual HUF, then have pity on him, no TDS. Okay. But when you are making payment to, means some payer is making payment to NR, then he will not get any sympathy that I am small individual HUF. See, sympathy is expected by the payer only, but that being a small individual HUF, that sympathy when will you get? When you are dealing with R, other parties are, and I am small, then sympathy is allowed. But if you are dealing with NR, like see for example, I make payment to some foreigner, non-resident, and if I say I am small individual HUF, so government will not even bother. Even if you are small, you have to deduct TDS because money is going out of India. So that was this point. Okay. So I hope this distinction is clear. Now look, let me come back to this chart. Actually, I was originally in this chart. Here, how did all this start? Here, what I was saying, whenever you are checking the receiver, you have to check what? Let me repeat some point, then I'll come to the main thing. If the receiver is resident, then TDS will come under these sections. These means CD Vakraf CP. And if the receiver is NR, then TDS will come under different section. That's what I said, na? But now there is exception to this rule, that there are few sections where it doesn't matter whether you are resident or non-resident. TDS will come under same section. Your understanding must rest on what? TDS will come under same section. So general rule is what and what is the exception? General rule, if resident, CD Vakraf CP section, NR, different section. This is a general rule, na? But under section 192 and winnings, it doesn't matter whether the receiver is R or NR. TDS will come under same section. No concept of different section. Under which section? Salaries and winnings. See, I have shown here. Look here. Read this, then I will explain the logic. Read. 192 means salary and what is that? B family? Winnings. See what I have written? TDS will come under same section whether receiver is R or NR. This is against what I was continuously speaking right now. Up till now what I was saying, if the receiver is NR, the sections are different. But here, whether receiver is R or NR, TDS sections are same. That means what you know, if employer pays salary, so whether the employee is a resident employee, non-resident employee, TDS section is 192. Similarly, winnings. I am making the payment of winnings and the winner is resident or non-resident. Doesn't matter. TDS section will be 190 for double B, for horse race, single B, for others, BA, for online game. Means there is no concept of different section, even if the receiver is NR. Why? You think why? First, let me finish this part of the chart. For other section, normal rule. See what's written there. In other section, TDS will come under this section if the receiver is resident. What do you mean by these section? TD, Vakraf, CP sections. Okay. And read the box. If the receiver is NR, then TDS will come but under different section. And under those different section, every income is subject to TDS at actual rate, not at ad hoc rate. So tell me why these sections has a different rule? Perfectly caught. See here in exception what I have, salary and winnings. If you notice, TDS of salary is deducted at slab rate and TDS of winnings is deducted at 30%. Tell me, slab rates in salary, 30% of winnings, is it ad hoc percentage or the real tax rate? It's the real tax rate. Actually, tax comes as per slab rate only, na. Even in winnings, the actual tax comes at 30% only. See, what was the logic of keeping NR under different section? Because for NR, government did not want ad hoc TDS. Government wanted TDS at real rate. And if you notice, in case of salary, TDS is already deducted at slab rate. So it is not some random 10-2%. Slab rate is the actual tax rate. Similarly, in case of winnings also, 30% was not just a random percentage, na? It was the actual rate. So what government thought, when TDS is already cut as per actual rate, so why to keep salary winnings under different section? That's why they kept under same section. See, if you understand the logic, then it becomes very smooth for you. Imagine if I would have asked to just buy at this and we would have just moved on, it becomes horrible. DT will become a terror. That's why I understand the concept and logic behind everything. Actually, see, right now I gave only two exceptions. Which two exceptions? Salaries and winnings. In fact, there is one more exception. Look here, 194N. But I will not talk on that right now because 194N is yet to come. You know, I have not explained all these sections of TDS up till now. Huh? See, we have done till 194 LA. Alphabetically, if you see, we have done from A to L. But after that, what is there? L, M, N, O, P, Q, R, S, T. So in that N will come. So when N I will teach, that time I will convince you. What I have to convince? That why under 194N, TDS is under same section whether the receiver is R or NR. So that time I will convince. Without knowing the provisions of that section, it's useless talking. At least you are convinced with salary and winning, na? That in salary and winning, TDS is cut as per the actual rate. So that's why no need of a different section. In short, just keep salary and winnings aside in your mind. But for all other transactions, your mentality should be, if he is resident, CD Vakraf CP section. If he is non-resident or a foreign company, then different section. He means the receiver, the other party. See, in payer, we just have to figure out what? If I am small individual HUF, I will be exempted under Rachis, otherwise not exempted. Okay. See, this chart I feel it is awesome. See, you are getting ready-made, that's why you will not value. I am saying awesome and all that because I know how much R&D I have done to create this chart, and you know this will give full conceptual clarity. So now see the summary. What is 1, 2, 3? 1, 2, 3 means decision of TDS, whether TDS will come or not, and whether under this section or that section depends upon three criteria. Criteria 1, nature and size of the payment. Criteria 2, type of the payer. And what is the third criteria? Type of the receiver. After checking everything, you have to decide. You know, one good hint I will give you. First, check the receiver only in the question. You know why? Because many times in the exam, you know, they have created a sum where the receiver is NR. So once you realize he's NR, you can straight give a conclusion TDS will come without even checking the threshold limits. See here, in case of non-resident transaction, there are no threshold limits. See, non-resident TDS is actually very simple. Why simple? All income subject to TDS, see all, no thresholds, and no need to buy a TDS percentage. So see, best trick is what you know. See, this trick I am able to give because of so many years of experience. So what is the best trick? Just figure out the receiver first. Once you come to know is non-resident or a foreign company, conclude TDS will come. What about the percentage? Actual rate. If it is foreign company, then 35%, and if some foreign partnership from 30%, okay. So that becomes very easy. But if in the question you see the receiver is resident, then all tantrums will start. Because in resident, you know, there are a lot of tantrums. It should be only CD Vakraf CP, not anything else. And the payer should not be small individual HUF. Then all botheration will start. You have to check the threshold, everything. So see, your line of thinking should be like this. Look, question. First figure out who is the receiver. If NR, foreign company, conclude TDS will come. But if you see he is resident, then go slowly. If he is resident, then you have to check, is it CD Vakraf CP? Check the thresholds, etc. And check the payer also. If by chance it's a Rachi section, small individual HUF, TDS will not apply. So all this botheration starts when the other party is resident. You know, this thing which I said right now, it is there printed in our book also. I will show you here. See, in our printed notes, I have already written here. Read what is written there. In order to decide whether TDS is deductible or not, following is a line of thinking. always check the receiver first. If NR, then TDS is always applicable. Means whatever I said right now, it's already written. Don't need to worry, okay? Then this completes what? Theory of payer and receiver. After that, what is the next stage of chapter? Stage 1 is done. What is stage 2? Section wise notes. You know how I teach section wise notes like this. Look, I have written all this section, and in whichever section, whatever points are there, I have written it as dot. I have written it as dot. Can you see the dots? Number of dots is the number of points. Like under 192, you can see how many dots? 3 dots. So there are 3 more points you have to study in 192. See, I told you in the last lecture that in CD Vakraf CP we were focusing on threshold and the percentage. Now extra points will come in section wise notes. And after the extra points of CD Vakraf CP, the section which are all remaining, even that will be covered in section wise notes. See, once I teach everything from this chart, our part 2 is done. And everything means, see, 3 points of salary. Then what is 193? Interest on security. Here I have to explain 2 points. Number of dots is the number of points. And you know why I am following this dot concept? This way, you know, you can organize the theory in your mind. Otherwise, see, if I just explaining point by point, after some point, you know, it will become a mess. At least here, we will have a track on here 3 points, here 2 points, here 1 point. It will be organized in your mind. So, see, starting with 192. Okay, see, I'll do one thing. Every section I start, first you have to tell me the knowledge which you have, then I will give extra knowledge. So, tell me in 192 what knowledge you have. You just have knowledge of threshold and percentage. What is the threshold? If salary exceeds basic exemption limit, TDS is slab rates. This much you know. Now see extra points. Point number 1. Point number 1. If employee wants, he can inform his other income to the boss, other than salary. See, boss is going to deduct TDS from salary. That is for sure. But if employee thinks that I have got some rent income also, I have got some interest income also, some other income also. So when boss is already cutting my TDS, let him cut on all my incomes, so that afterwards I don't have to bother to pay the tax. So if employee wishes, he can supply information about his other income to the boss, and boss will say most welcome. Boss will not deny. Boss says, okay, apart from salary you got some other income also. So tell me what you have. So those income also boss will count, and he will deduct little more TDS. This is written in section 192 that employee may furnish information about his other income, but employee cannot furnish information about his losses. Bosses should not listen to losses. Bosses should not listen to losses, because see, employee might submit some fake loss, and if employer believes the fake loss, and if he adjusts the loss against the salary, TDS will be reduced, na? That risk government is not ready to take. That's why, you know what law says? See, boss, if employee talks about his other income, most welcome. But if he is talking about his losses, ignore him. Bosses should not listen to the losses. However, if employee has got house property loss, that if employee is telling the boss, boss will listen to it. Because house property loss is not fakeable, it's believable. Other losses cannot be believed. House property loss can be believed. Why? Because generally under the head house property, why there is a loss? People have self-occupied property which is taken on loan, and on that housing loan you have to pay interest. And as you know, in self-occupied property you get deduction of interest on housing loan in spite of zero income. Self-occupied means you are occupying in that house. There is no income, but still you get deduction for interest. So that creates loss. So tell me, this loss is generally believable. So tell me, if employee says, sir, I have made some loss under the head house property, boss will consider it. Consider means he will set off that loss with salary. Accordingly, TDS to be deducted will become less. And this law has permitted. Okay. So bosses should not listen to losses, but he can listen to which loss? HP loss. Then, if employee wants, he can inform his chapter 6A details also. Sweetheart, don't mix up. I am in first point only. Yeah? How many points I will explain? Salary 3. I am still at point 1. Point 1 is about what employee can inform his employer. So answer one by one. He can inform here. He can inform about his other income and TDS thereon. Like see, if employee says, I have got some dividend income also and some TDS is already deducted in dividend. Huh? Keep that in mind. See, dividend from wherever you got, it was subject to 10% TDS. Huh? But employee is telling boss, you will cut TDS on salary as per slab rate. So cut as per slab rate on dividend. Because eventually dividend income will also be subject to slab rate. And he will also supply the TDS details. Because boss will not deduct double TDS. Huh? If employee's dividend income is already subject to some 10% TDS, that much credit boss will give. Because boss is about to deduct at slab rate. Boss is about to deduct at slab rate. It will be little more. But on dividend already some TDS has been cut. So that much boss will cut less. Na? In short, it is possible that the other income which you are informing, there already some little bit TDS is there. So boss will consider. In short, see what is the logic of all this, you know. An employee doesn't want the hassle of paying the tax on his own. As you know, employee mentality is what? 9 to 6 job. And after a job is done, you want to enjoy with your family. You don't want other botheration like paying the taxes and all. And when your company is already cutting TDS on your major income, which is salary, what will employee prefer? Cut TDS on my other income also. So that later on, I don't have to pay separately any tax from my pocket. See, this tick means what? What do you mean by tick mark? Employee can inform. So what he can inform? His other incomes, TDS or TCS details if any. Chapter 6A details also he can inform. Like if employee says, I've paid LIC premium. You know, for LIC premium you get ATC. For Mediclaim premium you get ATD. So all this employee will have to tell. See, boss will not dream now. If you are my employee, if you have done something for chapter 6A, you tell me. And if you tell me, I will listen to that also. Because what law says employee can inform chapter 6A detail to employer. Losses, what was my dialogue? Bosses should not listen to losses. HB loss, employee can inform. This finishes point 1. See, now you are understanding my strategy of teaching the chapter. Initially with the keyword, I was just focusing on thresholds and percentage. Now, with that same keyword, I am moving further with extra points. And see, as soon as one extra point gets over, I will circle it. Huh? See this. See what I am doing. Please notice what I am doing. Look. Tell me that dark circle. That dark circle is a sign of what? 1 point done. See why I have to keep it organized? Because see, I know so many points will come at the end of this. It can become a mess. So I have to carefully step ahead. Second point. Huh? Premature withdrawal from RPF. You know what is RPF? Recognized Provident Fund. Imagine you are an employee working in a company. So you know there is a rule that when you retire, the Provident Fund money which you get, it will be exempt provided you rendered service for minimum 5 years. This is a rule which you might have studied in CA Inter under the head income from salary. If you have forgotten, don't worry, I will explain. So what is the rule? Whenever employee retires, the Provident Fund money which he gets, it will be exempt under section 10 bracket 12. But Provident Fund becomes exempt when? If your service is greater than equal to 5 years. What is the logic of 5 years, you know? Because see, this Provident Fund which you are getting, till you retire, it is invested somewhere as per government directions. You know, in one lecture I explained what is RPF. What is RPF? Recognized Provident Fund. This Provident Fund is there in private sector. And when you call it as recognized, when your employer has kept the Provident Fund money invested as per government's direction. So see, what law expects, wherever Provident Fund money is invested money should remain intact for 5 years. Na? At least, see, when we also invest, we don't want to break the investment. Like I also make some FD or some long-term investment, I want to keep it intact. No one prefers to break. But sometimes employee, after 2-3 years only, he wants to leave. So suddenly employee says, I want to leave the job, I want to leave the job within 2-3 years only. So we will have to give him Provident Fund. And to give Provident Fund, we have to break the investments. That hurts. See, basically law doesn't want Provident Fund money which is invested somewhere should be broken. But if employee is about to leave, he is saying, I want to leave the job, it's my will, it's my choice. So we cannot stop him from leaving the job. Na? So how government is expressing its anger? You want to leave the job in 2-3 years only? Okay, fine. Provident Fund money will become taxable. You want exemption? At least stay in one job for minimum 5 years. Instead, I am justifying the logic of 5 years. So what is the conclusion? See, I will come to the main point slowly. First, remember one rule. Whenever employee retires from a job and if he has done service of minimum 5 years, then only Provident Fund money will become exempt. That means if the service is less than 5 years, Provident Fund is taxable. Such Provident Fund, when it becomes taxable, is subject to TDS under a separate section 192A. That is called TDS on premature withdrawal from RPF. Repeat, premature. Premature means you didn't even serve the company for 5 years. You want to leave before 5 years. You want to break the Provident Fund and encash. That is called premature withdrawal from RPF. And premature withdrawal will be exempt or taxable? Taxable. And when taxable, TDS will apply. Under section 192A. See, I have written here. Read. Still explanation is going on. We have patience. Premature withdrawal from RPF means service less than 5 years. And if you get more than equal to 50,000 from your Provident Fund, imagine your employee, you're getting 50,000 or more. It will be subject to 10% TDS under section 192A. Now what doubt should come? So why a different section? Anyways, Provident Fund is an item under the head salaries. You remember CA Inter when you used to do income from salary? Everything which employee gets, we put it all under income from salary. So when this is an item of income from salary, TDS will automatically come under 192, na? But government has preferred to keep a different section. You didn't see the section is different. Why? See, firstly there is a different section. When different section is there, there is a different threshold limit, 50,000, different percentage. Why it was necessary to keep it different? See, employee gets so many things in job. Whatever he gets in job, everything should be subject to TDS under 192. But why the hell a different section for this? So you know why this is kept in a different section? Because generally what happens, companies, they miss the TDS on Provident Fund. Why do they miss? Because what is the general impression of Provident Fund? Oh, Provident Fund is exempt, Provident Fund is exempt, Provident Fund is exempt. Talk to a layman and just ask him, what happens to a Provident Fund? Yes, I have heard it's exempt. This is a general news in the market. What? Provident Fund is exempt. And correct, it's exempt. But only few people know, provided you have done the service for minimum 5 years. And generally people work for a longer period. So generally Provident Fund gets exempted. So what is the general image? Provident Fund carries exempt. And because of the general image, companies miss to deduct TDS, thinking what? Provident Fund is exempt, Provident Fund is exempt. So under that impression, TDS gets missed. This income tax department noticed in real life. That's why what they thought, Companies are not deliberately skipping the TDS, but because of the general image which Provident Fund carries, they skip the TDS. So that's why law said, now we'll do one thing, we'll make a separate section only. If the section is separate, it will act as a reminder, because the title of the section itself says premature withdrawal. So it will automatically act as a reminder. So if I'm a company like Reliance, Wipro, L&T, and if there are employees under me, I will always be reminded, 192A, premature withdrawal. So whoever retires from my company for less than 5 years, I will make sure TDS is deducted. See, in short, the logic is, in real life, there were defaults. Not deliberate default, innocently. But government cannot tolerate the defaults, na? That's why they got an idea of creating a separate section which will act as a reminder. See, till the time this section was not there, earlier also TDS was there in this premature withdrawal, but since there was no section, it was covered automatically under 192. But now government has made a separate section for that. Okay. And since the section is separate, threshold limit is also separate, 50,000 or more. One more thing, if it is 50,000 or more, then what if it is less than 50,000? Then separate section will not apply, but automatically under 192 it will go. See, 192 is a wholesale lump sum TDS on all items of salary. If your salary income exceeds the basic exemption limit. So even if a provident fund amount might be 5-10,000, added in salary. What if after adding so many items of salary, it crosses the basic exemption limit? In short, see, best way to remember is, if provident fund withdrawal is less than 50,000, club it under 192. No separate section. When will separate section come? If the amount is greater than equal to 50,000. And the percentage will also be then 10%. Here one more doubt should come. Sir, why only recognized provident fund? What are the other provident fund? You don't have any knowledge. I taught you all this in PGPP. You don't remember the time spent by me with you in PGPP. Statutory provident fund is there, recognized, unrecognized. Statutory provident fund is in government job. That is always exempt. So TDS will anyways not come. Unrecognized provident fund is always taxable. TDS will always come. No risk of people will forget. RPF is the controversy, because in RPF, if your service is less than 5 years, it becomes taxable. 5 years or more, then only exempt. That's why for RPF, government wanted a safety. So finally tell me, if someone gets provident fund from statutory provident fund, it is exempt, TDS will not come. If it is unrecognized provident fund, taxable, TDS will come, but under 192. No need of separate section. Separate section is there for RPF. So finally, what you have to remember? 192A, RPF, premature withdrawal, means service less than 5 years, greater than equal to 50,000, percentage should be 10. This much you have to remember. This is my second dot in 3 dots. Okay. So I'll do one thing. Once a particular dot is over, I will circle it with black. Can you see this dark circle? Black means one point is over. Okay. One more point. Did you notice one thing? The threshold limit is greater than and equal to. All my threshold limits up till now has been with greater than sign. There are only 3 thresholds where you will find greater than and equal to sign. 2 have already come. 1 will come. Yeah, why I am telling you now? Because you start by heading. Everywhere the threshold is greater than, greater than, greater than. Where it is greater than and equal to? Purchase of immovable property. Greater than equal to 50 lakhs. That was one place. C equal to sign. Then here premature withdrawal RPF. One more place will come. By heart, from now only there are 3 situations where threshold limit will be greater than as well as equal to sign. Okay. Then see one more point. One special point for ESOPs. Employee stock option scheme is a benefit for the employee. Here what benefit employee gets? Shares of the company which might have a good market value, you are offered at a cheaper price. Okay, sometimes free of cost also. So that is ESOPs, which everyone knows. Okay. Now, when employee is allotted ESOPs, it is an item of salary income, and anything which comes under that salary, TDS will come under 192. So there is no doubt about whether TDS will come on ESOPs or not. In fact, everything which you enjoy in your job, everything which you enjoy in the job, whether basic salary allowances, perquisite, ESOPs, everything is subject to TDS under 192. But you know why special talking on ESOPs now? See, there is one exception. If I am a startup company and if I have allotted ESOPs to my employee, so although it's a benefit for you under that salary, TDS will not be deducted now. It will be deferred. It will be deferred. See, generally, TDS is deducted when? See, generally, the moment I allot ESOPs, benefit arises. In the same year, TDS will be deducted. See, TDS comes on everything which comes under their salary. Salary doesn't mean the monthly check which you get. You remember income from salary from CA Inter, na? Under income from salary computation, there were so many things. Allowances, perquisites, blah, blah, blah. So tell me, generally what happens with ESOPs? It's a benefit including income from salary, and TDS will come spontaneously in the same year when ESOPs are allotted. Because the moment ESOPs are allotted, you are gaining the benefit. TDS will immediately come. But there is an exception that if the company who gave ESOPs is a startup company, then TDS will not come now. It will come at a later stage. What stage, you know? After 4 years expire from the end of AY. Like see, in this year I allotted ESOPs. Let's assume the year in which ESOP is allotted is 25-26. So what is the AY for that? 26-27. And after the end of AY, count 4 years. After 4 years, TDS will be deducted. Tell me why it is deferred. Why? See, normally ESOPs, TDS is applicable when? Once the ESOPs shares are allotted, means in the current year, immediately in that year TDS will be deducted. But in case of startups, it's immediately or deferred. Deferred means it is postponed. When will TDS come? After the expiry of 4 years from the end of AY. Actually speaking, it's 5 years only. From previous year, actually the year when you get the ESOPs is the previous year. From previous year, if you count, it's 5 years. But why this deferment? Because generally in startup company, there is cash crunch. Like see, I have created, you know the startups like Zomato, Swiggy, now they have become big giant. But earlier when they started, they were small companies. Zomato, Swiggy, etc. Or there are many delivery apps, okay, Blinkit, etc. So now they have become a giant company. But earlier when they started, they were small. So, you know, when a startup newly starts, there is cash crunch. But you know, all these startup, they need high quality employees from IIT, IIM. And don't you think if a startup needs high quality employee should be given good salary? But startups do not have money to give them salary. So how do they keep the IITians and IIM people happy? By giving them ESOPs. Like see, imagine I have a new startup and I have hired 4 employees who are graduated from IIT or IIM. Means they have got superb qualification, they are high-tech people. So I want to hire because I am fully motivated with my startup. But don't you think such good quality employee need good salary? But right now I don't have money. So what I have promised my employee, don't worry, I am fully confident our startup will become a big giant company. So it will have good value in market. So I am allotting shares of my company to you. So, and why company is giving shares? Because they don't have cash to pay salary. Okay. So already there is a cash crunch, and here if loss is TDS, so it will create a trouble. So that's why government is also supporting the startups. Okay, since the startup company itself doesn't have cash to give in the form of salary, they are replacing the salary with ESOPs. And even employees are sacrificing right now. See, in startup, employees also have to cooperate. Currently, they will not get good salary. But in future, when the company becomes giant, they can proudly say, I am employee of this company. So even the company as well as employee both are in financial crunch. That's why TDS is deferred. And anyways, in ESOPs, where you are getting some cash salary, it is a benefit in kind. So government says it's okay, we will defer the TDS. And explain the logic. And as you know, Narendra Modi, he wants to encourage all these startups in India. He has a mission of Startup India. Okay. Now see, right now what did I say? TDS, is it that it will not come or it will come? It will come, but at what date? After the expiry of 4 years from the end of AY. But if within 4 years employee sells the shares of ESOP, like imagine you were my employee, I was a startup company, I allotted the shares. So till the time you are keeping the shares, TDS will come when? After the expiry of 4 years. But within 1 or 2, 3 years, 2-3 years only you sold the shares. Maybe startup company became suddenly a giant company. And the company's shares also got good value. So employee decided to sell off the shares within 2-3 years. If you sell the shares early, that means you are encashed. TDS will come early then. If you are not selling your shares, then TDS will come when? On the expiry of 4 years. But if you sell the shares before that, TDS will come immediately. And if you leave the job, then also TDS will come first. In short, we have to check 3 events. Expiry of 4 years, sale of shares of ESOPs, leaving of job. Whichever happens first, TDS will be deducted. That means if you are not selling the shares, you are not even leaving the company, then TDS will come on the expiry of 4 years. So see, I have made a drawing here. Look. See, this PY means this is the year when ESOPs was allotted. So the year in which shares are allotted, I am calling this as previous year, okay? And after the previous year, there comes AY. After AY, 48 months. In the law, they have written 48 months, which is nothing but 4 years only, na? So expiry of 48 months, then date of sale of ESOP shares, date of leaving the job, whichever is earlier. From that day, within 14 days, TDS should be deducted. See, TDS will be deducted in future, but the rates will be current. Because see, in future, the slab rates, etc. will change, na? But don't forget that ESOPs which was allotted, it was a benefit of the current year. So although TDS will come in future, but it will come as per the current rates, not as per the future rates. Okay. So this was one good point. Okay. So tell me, normally when TDS comes, immediately, like Reliance, Wipro, not a startup company, general company, when they give ESOPs, immediately the year when ESOPs are allotted, TDS will be attracted. Deferment is there only in startups. What have I written this thing? This is the benefit amount. In ESOPs, what benefit you get? Fair market value of the shares of the company minus the issue price which you have to pay. Difference is the benefit for you. And that benefit is subject to TDS. Okay. This was third point. So 3 points of salary we have done. Okay. Then next section is what? Next section is what? 193. In every section, first you have to tell me the knowledge which you already have. Then I will supply extra knowledge. In 193, what you studied? Interest on securities. Threshold more than 10,000. Percentage 10. This knowledge you have? But tell me, 193 is interest on securities. If the security is a government security, no TDS. Every security interest subject to TDS provided interest exceeds 10,000. Percentage 10. But if the security is a government security, no TDS. Why? To attract people to invest in government securities. See, who makes all this rule in income tax? Government of India. So basically, Government of India wants what? People should invest in government security. And what is the attraction for that? No TDS. See, no TDS means that doesn't mean income will be tax free. Huh? You invest in any government security, income which you get will be taxable. But what is the relief? TDS will not be deducted. And everyone prefers what? don't deduct TDS. I will pay the tax on my own, but don't deduct at source. Because see, if you have to pay it from your own pocket, you will do the setting. You can do some manipulation also. But if it is cut at source only, then the tax is already cut, na? So generally, do you agree? People prefer that TDS should not be deducted. So this, if you want, invest in government security. Indirectly, government is threatening you. If you invest in some private securities, interest which you get, if it is above 10,000, TDS will come. 1 point done, 1 point done, 2 dots, 2 dots. So what is the first point? Central and state government securities. Read what I have written. No TDS is applicable. But here there is one wait, what was the logic here? Marketing. I have written the logic also. Basically, government is marketing their own securities. Okay. But see, here there is one exception. Look at the exception. There are two securities of Government of India where TDS will apply. Read what I have written. 7.75% savings taxable bonds 2018. 2018 was the year when these bonds were issued. What is the name of the bonds? Savings taxable bonds. And what is the rate? 7.75%. And there is one more. Floating rate savings taxable bonds 2020. See, these are the name of the government security. See, government security is a generic term. But every security has some name, na? Students are general, but every student has a name, na? So that way, these are government security, but they are popularly called by which name? One is 7.75% saving taxable bonds 2018. Other is floating rate saving taxable bonds 2020. Here, if the interest exceeds 10,000, TDS will come. Why? Every government security of India is free from TDS. But why TDS over here? Because here you are getting high rate of interest. These government securities are giving you high rate of interest. You know, generally in government security, how much returns you get? 5 to 6%. Trust me. Any government of India security invest. See, government security, one thing good is your money is safe. But the returns are less. How much return you get generally? 5 to 6%. And just imagine government security which fetches 5 to 6% return. Here if you are getting 7.75%, the rate is too much. So that's why government is saying you will have to bear the TDS now. There is one advantage and there is one disadvantage. Advantage is what? You are getting high returns, which generally government security will never fetch. This is the advantage, plus point. And what is the minus point? TDS will come. See, basically these security government of India has issued like private companies. Just as private sector, when they issue securities, they give you good returns. So here, since they are giving good returns, you have to compromise with TDS. Even this floating rate means what, you know? Rate of interest is not fixed. See, these are bonds where government has not fixed the rate of interest. It will fluctuate. But whatever that fluctuating rate will be a good rate of return. Because these two items have got good rate of return, TDS has to be tolerated. But obviously only if the interest exceeds 10,000. That was a normal threshold for interest on securities. Okay. Then one more exception. Look at me. If I am LIC, if I am GIC, what is GIC? General Insurance Corporation of India. Or if I am any insurance company and if I receive interest, I will never be subject to TDS. I will get full interest income without TDS. I am blessed. Who am I? LIC, GIC or any other insurance company. Full form, Life Insurance Corporation, General Insurance Corporation or any insurance company like Birla Sun Life, blah, blah, blah. So if I am an insurance company, what is the blessing? Wherever I get interest from, no one will deduct my TDS. You know why? Because insurance companies are honest. They honestly earn and pay the tax. So government feels safe. You know why the concept of TDS started in India? Because people are tax evaders. people in India, they don't pay tax. That's why what government thinks, don't give the full income to the person. Cut the TDS at source only. Because we know these people don't pay tax in India. But here who is earning the income? Insurance company. And insurance companies are people of high integrity. They honestly pay tax. And when government feels that the person earning the income will honestly pay the tax, so why to keep the botheration of TDS? Because TDS will complicate further things also, no? So see, what was the next point? If at the receiving end, if at the, see, don't mix up the point. See here, many students, when they feel sleepy, you know what they think? LIC is paying interest. Sorry, it's not like that. LIC is receiving. That's why I was doing the acting. Insurance company, see this, receiving. So if I am receiving, it is my income, but I am honest. I will honestly pay tax. That's why I am blessed with what? Whoever gives me interest, they will not cut TDS. See, here government was giving. In the first point, government was giving. And when giving, they were not cutting to attract people. That was marketing logic. And here trust is the logic. That insurance company receiving honest people paying tax, no TDS. See, these two exceptions you have to remember. So see, conclusion. Generally, securities interest is subject to TDS under 193. However, there are two exceptions. Here, even if the interest is on securities, TDS will not come. When government securities, obviously there are two exceptions, and securities held by any insurance company, whether LIC, GIC or blah blah blah, any insurance company. 2 points are done. So let me make dark circle. Okay. See, as I am moving further with the points, I would suggest you keep rewinding your mind. Then see next point. See in CD, Vagraph CP, next alphabet is D. Tell me every point I start. First you have to tell me the knowledge which you already have. So tell me for dividend what knowledge you already have. If dividend income is about 10,000, 10% TDS will come. Correct? Now, here also there is one point that if I am LIC, same point. If I am GIC or insurance company and if I get dividend income, there will be no TDS. Because government believes that insurance company when they earn dividend, even if they earn crores of dividend, they will honestly pay the tax. And when the receiver of the income is honestly going to pay the tax, so government is not afraid. That's why no TDS. Same point which was there in interest on security has come here. And you know why government has made specially something for insurance company? Because see, insurance company, whatever premium they collect from the policy holder, the money is not kept idle. It is either invested in securities or shares. I don't know whether you audited some insurance company, but if you audit some insurance company, in the balance sheet of insurance company, you will find lot of securities and shares investment. Because think, if I am insurance company, I charge premium from the policy holder and premium is received first in advance. Claims are to be settled somewhere in the future. That is if something happens. But premium you get in advance. And so much of money where they keep? They keep it invested in securities and shares. And securities will fetch them interest. Shares will fetch them dividend. And here they are getting the advantage of no TDS. So this one point is over. Then there is one note here. The note is what in case of dividend, the threshold of 10,000 there or not is applicable only if the shareholder is an individual. That means if the shareholder is some partnership firm or a company, like see, imagine a company is getting dividend from another company. Means company is a shareholder. See, the place from where you get the dividend, it's a company. But shareholder is also company. Then even if below 10,000 TDS will come. See, last lecture I gave you the threshold of 10,000. But that time I didn't talk in detail. But in the act, what is written? 10,000 provided the shareholder is an individual shareholder. See, here I have written. And payment should be done by any mode other than cash. See this. no TDS on dividend up to 10,000, but that is only if the receiver is individual. So that means in the question, if they give Reliance gave dividend to some ABC limited company, then even if dividend is less than 10,000, TDS will come. Okay. So 10,000 threshold you have to check only when the shareholder who is receiving the dividend is an individual, and that too amount should be given to him not by cash. And generally big company, when they give dividend, they will not give in cash. But who knows, for example, there can be some private company. In private company, hardly 5-6 shareholders are there. And if dividend is given in the form of cash, then what? Then TDS will apply whether less than or more than 10,000. No matter is individual. See, individual plus other than cash, then 10,000 is the threshold limit. In short, best to remember is what you know. In dividend, don't always say up to 10,000 no TDS. Relax. You have to check. What you have to check? Two things you will check. The shareholder who is receiving the dividend should be individual, and the mode in which he has received the dividend should be any mode other than cash. Then if it is up to 10,000, no TDS. Above 10,000, TDS will come. So this 10,000 is not a new point, but what was the new development? This is only when the shareholder is individual and received through any mode other than cash. And this point I have already explained. If at the receiving end there is an insurance company, on dividend there is no TDS. So 1 point and 1 note. See, this I will show you. 1 point and 1 note. Okay. Then next section also there are 4 dots, 4 points and 2 notes. First tell me what is 194A. First you have to give me the knowledge which you have, then I will talk extra. Na? 194A is what? Interest other than interest on securities. Here if banks or post office pay more than 50,000, then only TDS. And if other people pay more than 10,000, percentage is 10. See, bank and post office, they are paying to their customer. Up to 50 no TDS, above 50 TDS. This one knowledge you have. Now, there are 4 points where TDS will not come on interest on other than securities. Interest other than interest on security. See, first point is what you know. If bank pays interest on savings account, you know I told you that bank when they give interest above 50,000, TDS will come, but that is in case of FD account. Tell me in bank which types of account you have? Current account. On current account you never get interest income. On savings account you will get interest, but there is no TDS. On fixed deposit, recurring deposit account, you will get interest and there is TDS if interest exceeds 50,000. So here what was the exception you heard? Only in FD and RD TDS applies. On savings account, no TDS. Why? Because the money in savings account is not your wealth. It's the basic money. Instead of keeping the money at home, you prefer to keep it at bank so that the money is safe. That's why the name is savings account. See, sometimes you cannot keep the cash at home. Na? It can be stolen away by someone. So generally people prefer to keep the cash not at home but to keep it safe in bank. So keeping in savings account is a basic thing which even a middle class person has. But when you make FD, that means it's a sign of you are becoming wealthier. You are having a lot of income. Then government has an eye and they want TDS. And savings account means it is not a big wealth. It's the basic money which everyone has got. So your government is exempted from TDS. And anyways on savings account you get very nominal interest. Conclusion, look, if bank pays on savings account, they don't deduct TDS. If they pay on FD, RD, if the interest exceeds 50,000, they will deduct 10% TDS. Okay. 1 point is done. Okay, then see next dark circle. Well, right now what did I say? When bank gives interest on fixed deposit, then recurring deposit, then TDS comes. Na? But if bank FD is created by Registrar General of High Court in case of a pending litigation, if bank FD is created by Registrar General of High Court in case of pending litigation, on such FDs, no TDS. Understand my flow. First I said savings account, remove it, no TDS. Only FD and recurring deposit. Now further movement. If that FD is in the name of Registrar General of High Court in a pending litigation, no TDS. You know what does this mean? Sometimes there are some court cases going on and people are fighting for the money. And until the judge gives the judgment, what is the instruction of the judge? See, don't fight, you also don't fight, you also don't fight. Till the time we resolve the dispute, we will keep this money in our custody. Court wants to keep the money in their custody. And who is the main person who handles the administrative work of court? Registrar General. So what they do, till the time the court case is resolved, the money for which people are fighting, that money is kept safe in a bank. And they prefer to make it a FD. Because see, money if you keep in bank, FD is the better option. It will give good returns, na? Because God knows when the court case will resolve. So till the time court gives the judgment, the money for which people are fighting, it is kept in bank FD. But FD is not in the name of the fighters. Because people who are fighting, there is no resolution yet that who is the owner of the money. So FD will be made in the name of court. But court is not a human being. So Registrar General of the court. So now imagine the case is going on for 10 years. So 10 years FD will also generate interest. But on such interest, no TDS. Why? Because FD is in the name of court and court is not the owner of the money. TDS comes when the income is handed over to the owner of the income. Tell me, here in this FD, interest income will be there. But that FD who owns? It is in the name of court and court is not the rightful owner. It is temporary. Court has created FD in their name. But actually the money will belong to someone who wins the case. But someone who wins the case, God knows who will win the case. And that judgment will come in future. And currently FD is whose name? See, name is important because when bank deducts TDS, they have to deduct in the name of someone. Like if I deduct TDS of Mr. Sharma, while filing the TDS return, I have to write Mr. Sharma's TDS. See, when you deduct TDS, whose TDS you are deducting, that name matters to IT department, na? And currently the FD is whose name? High Court. And High Court will not file the return. It is not their income. In short, no TDS if that bank FD is in the name of Registrar General of High Court. This point has come twice in exam. I don't know, maybe it was more than 2 times also. But in my recent past years or so many years of teaching, I have seen this point has come 2 times in your exam paper. Okay. So see, I have written here, read. What was the first point I said? When bank gives interest on savings account, no TDS. And what was the second point I said right now? Even if bank gives on FD account, and if the FD is in the name of Registrar General of High Court, who is not the real owner of FD, TDS will not come. Then third point, look. Third point is similar to what I taught in the previous section. Look here. If I am LIC, GIC or insurance company, or if I am a bank receiving interest from anywhere, I am blessed. No one will deduct TDS for my case. See, here extra point is banks are also covered here. See, in the previous points only LIC, GIC, they were there. No? Here bank. Means imagine bank receiving interest. Tell me, why will bank receive interest? Bank give loan to public. So when bank giving loan, obviously they are receiving interest. And when bank receiving interest, it is whose income? Bank's income. But banks are cheaters or they are honest? They are honest. And since honestly they will pay the tax, so they are blessed with the benefit of whatever they earn. People will not deduct TDS. Okay. Yes, when bank pays to public, public is cheater. Cut TDS to public. But when public gives to bank, it is becoming whose income? Bank's income. Banks will honestly pay the tax. No? See why I am doing the action? Because sometimes in a conversation, you just listen to bang, bang, bang. But bank is at the receiving end or paying end, that you should notice. Na? So that's why I am doing the acting. So here what was my acting? if I am bank, insurance company, I am receiving, so I will get full interest without TDS, okay, because I am trustworthy. Fourth point, look, cooperative society pays interest to its member or some other society, no TDS, because cooperative society are good people. Government doesn't want to bother them. They are actually societies not made for profit making. See, generally cooperative societies have got a tag of entities not meant for profit making. So that's why they are given one advantage, that see, cooperative society, anyways your formation is not with an objective of generating profit. So you don't have to take the hassles of TDS, especially if the transaction is between you and your members. See, exactly how a cooperative society operates, we have done a separate topic of that. Assessment of cooperative society has been done. Cooperative society, okay, so they are actually good people. They are entities not meant for making profit. So when a cooperative society pays interest to its member, or one society pays interest to another society, between them if there is a transaction of interest, see why I am talking interest, this section is of interest, huh? So any interest flowing from one society to other society or society to its member, no TDS. But look here, but means some exception will come now. Generally no TDS, okay, generally. But see, imagine if I am a cooperative society, if my turnover in the last year is more than 50 crores, my turnover, who am I? I am a cooperative society, my turnover in the last year is more than 50 crores. Such a huge turnover, then such a big cooperative society, government has no sympathy. Now if you pay interest, deduct TDS. But if the amount exceeds 50,000, means here they have threshold limit of banks. What was the threshold of banks and post office? You forgot banks and post office, what was the threshold? 50,000. Same threshold is applicable for big cooperative society. Why I am saying big cooperative society? Only when the cooperative society's turnover in the last financial year is more than 50 crores, I will call them as big cooperative society. Then make interest payment, TDS should be deducted. See, I have written here. See, generally what you should buy at? Cooperative society paying interest to member, no TDS. But the moment you realize the society's turnover in the last year was above 50 crores, and if the interest amount paid is greater than 50,000, then TDS will come. So these were the 4 points where TDS will not apply. Okay. Then there are 2 notes. Try this point up. Imagine a person has fixed deposit account with Bank of Baroda. One FD is in Andheri branch. Another FD is in Malad branch. Interest on FD is 30,000 each. So whether TDS will be deducted or not. Who deducts TDS? Bank has to deduct for the customer, na? And it is a FD. And generally FD account TDS is applicable provided interest exceeds 50,000. What is the threshold limit? 50,000. But the question is how to check 50,000? Will you check branch wise or you will aggregate and check bank wise? Will you check branch wise or aggregate and check bank wise? Because see, if I see bank wise, the total of 30 plus 30 is 60,000, which is above 50, TDS will come. But if I see branch wise, both are below 50, TDS will not come. So here you know what law says? If the Bank of Baroda follows CBS, CBS means core banking solution. If banks adopt core banking solution, it is a software, then we will aggregate and check. You know why? Because see, if Bank of Baroda has core banking solution, you know what is the meaning of that? It's like centralized software. Means even if you visit Andheri branch, even if you have FD with Andheri branch, they know that you also have FD with Malad branch. See, whereas see, if you visit Andheri branch, if you visit to my branch, I should be knowing about your FD of my branch only, na? But I know your FD in Chennai branch also, Hyderabad branch also. So even if you are visiting a Mumbai branch knows everything about your other branches. That is possible through CBS because they have centralized accounting software. So tell me, if one branch knows details about all branches of the bank, then they can aggregate and decide. Na? So what Andheri branch will do? They will say, from our branch you are getting 30,000, but there is one more branch na, where you are getting 30,000. So since the total is 60, we will deduct TDS. But they will deduct TDS on 30,000. And your Malad branch will also say what? See, from our branch it is 30. But you have got FD in the other branch also. Totaling that it becomes 60. So we will deduct TDS. See, TDS will be deducted by the respective branches. But both will deduct on the respective 30,000. Because both have the reason that your aggregate is 60,000. Okay. It's not that only one branch will deduct. Both will deduct on respective 30,000. Because we are adding and checking. But this adding should be done when? If bank adopt CBS. And nowadays, all the banks which you see on road, most of the banks have got core banking solution. But there are some few banks like Bombay Cooperative Bank, small cooperative bank where there is no CBS. So tell me, if there is one very small cooperative type bank and there is no CBS, so what they do? Then they will check branch wise. If in one branch the interest is 30,000, which is below 50, they will not deduct TDS. Another branch will also say that here also is 30, they will also not deduct TDS. But that is possible in very small types of bank which are normally possible like cooperative type of banks. Okay. In my whole communication, when I say bank, it also includes cooperative bank. But generally cooperative bank may be very micro level. So there they might not have CBS, then they will check branch wise. See, after 4 points where TDS is not applicable, I want to discuss 2 notes. One is whether to check branch wise or to aggregate and check bank wise. The answer is check bank wise if there is CBS. Next point is C. What did I say? In case of banks and post office, what is the threshold limit? More than 50,000. But if the account holder is a senior citizen, 1 lakh. Instead of 50,000, it will be 1 lakh. If the account holder is a senior citizen, means imagine I am bank. I am some Punjab National Bank, State Bank of India, Axis Bank, ICICI Bank, and my account holder is a senior citizen. Senior means 60 years and above, plus resident. See, when do you get a tag of senior in income tax? Resident, 60 years and above. You should be resident plus 60 years and above. So if you are senior citizen account holder, then bank will not deduct up to 1 lakh. Above 1 lakh, they will deduct. See, basically for senior citizen, they don't want to bother. Because generally we think that senior citizen might not have much income. Why to bother him in old age? But if senior citizen is getting interest income of more than 1 lakh, then TDS will come. See, actually, this 50,000 threshold has come where? Banks, post office, as well as big cooperative society. See here. Wherever I said 50, it will become 1 lakh. So tell me where I said 50? Where I said 50? Banks and post office I said 50,000. Then I also said in case of big cooperative society, if interest exceeds 50,000, TDS will come. So wherever I said 50,000 in my communication, replace 50,000 with 1 lakh if the other person is a senior citizen. See, I have written here. Banks, post office, big cooperative society, threshold of 50,000 will be replaced by 1 lakh. See, actually what I have done, don't lose the link from here. 4 points I said, 4 dots, and there were 2 notes. What were the 2 notes? One note was for CBS, other was special threshold for senior citizen. And once I finish a particular point, I will do dark circle, dark circle, dark circle, dark circle. See, I enjoy doing all this, but my real enjoyment comes only when you remember the things also, okay? So I feel that yes, I am satisfied, I have taught, but that is my satisfaction. Your satisfaction is when you remember these circled points, okay? What is 194 B, BB, BA? Winnings. In winnings, what was the threshold? Online game, no threshold. Even if the winning is 100, TDS. But for not online game, physical gaming, 10,000 is the threshold limit, correct? Now, one extra point here. If winnings are in kind, like see for example you have won something, and in winnings I am giving you iPhone. One iPhone you have won. So how to deduct TDS? See, if I am giving money, so from 100 I will cut 30, I will give you 70. But that is if money is given as winnings. But sometimes the winnings is in kind. So in such case, you know what to do? I will tell the winner that see you want this iPhone, you want now, you won the iPhone, you are happy, you want iPhone. Do one thing first, pay tax. I will ensure that the winner pays the tax. How much? 30% of the value of iPhone. Let's assume the value of the iPhone is 1 lakh. So 30% of 1 lakh is 30,000. I will tell the winner, please pay 30,000 and you show me the receipt that you paid, then only I will give iPhone. And if the winner say, why will I pay? You don't want to pay, then forget iPhone. You want your winnings? So you first pay the tax. So this is just one point which you have to remember in winnings. See, actually this point you can generalize. Later on also you will find one transaction where payment is made in kind. You make it as a rule only. Whenever you make the payment in kind. Kind means other than money you give something. How TDS operates then? You have to tell the other party to pay the tax from his pocket. And once he shows the proof of payment of tax, then only you have to release that thing in kind. So one point of winnings is done. See dark circle. What is next? 194C is what? Works contract. Now in works contract, first you tell me the knowledge which you have. Then I will share extra knowledge. Single payment more than 30,000. Aggregate payment more than 1 lakh. TDS depends upon the receiver. Receiver individual achieve 1%, otherwise 2%. That much I have already taught. Now, there are two important points and one note which I will explain now. Look. First see this winnings thing which I have already explained. Just read from the notes. If winnings is in kind, first ensure the winner has paid the tax, then release the prize. Okay. Now what we are doing next is 194C contract. Now, here first point is what what is the definition of a contract? This I will explain. Tell me why definition of contract is important. Because if something falls in the definition of contract, then only TDS under 194C will come, na? As per single payment more than 30,000, aggregate more than 1 lakh. That rule you will follow when? If something is a contract. So what is a contract? So see what Act says, contract should not be anything. It should be a works contract. It should be a works contract. And works contract means ABC JAL. This is a keyword. See, basically 194C has defined the word contract. And as per law, contract should be works contract. And then they are explaining what is covered in works contract. There is a keyword ABC JAL, etc. See, ABC JAL is kind of examples. Exactly what is works contract, This I explained in the last lecture. Whenever someone is working as per my requirement and specification, it's a works contract. I want you to feel the word. I want you to feel the word work. Work means you are working as per my requirement and specification. So if this thing is proved, it's a works contract. See, this example I will explain because law has given. But actually you don't need any example if your fundas are clear. Your fundamentals should say what? If someone has done the work as per my requirement specification, it becomes a works contract. Now see, these are the examples given by the Act. A for advertisement contract. A for advertisement contract. See, in every example given by the law, in every example you will feel someone is doing the work as per my requirement specification. Even if I speak a lot in ABC JAL, at the end what you will feel? In short, meaning is same, na? That is, someone is doing the work as per my requirement specification. Moral will be that only. But I will have to speak because in the law they are speaking a lot. One by one, what is A? Advertisement. Tell me why advertisement is a works contract. Prove me that here someone is doing the work as per my requirement. It happens in advertisement. Like, see, I give advertisement in Times of India newspaper. So what newspaper company will do? They will display my ad anywhere. If I say I want my ad on the front page, it will appear on front page. And the content also, it will be as per my requirement. If I say in the front page of Times of India, I want to give an ad of CA final new batch is starting. So they will write CA final, they will not write CA foundation. No? Means ad will be made as per my requirement, as per my specification. That means that newspaper company, Times of India, whatever amount I am giving, it's for works contract. See, this meaning I told you first only, but why government has specifically given advertisement? Basically, government is afraid. You know what government thinks? What if people don't understand what is works contract? And what if because of misunderstanding you skip the TDS on advertisement? And advertisement are giant deals. Big company, they throw crores of money on advertisement. And because of misunderstanding, if someone by chance doesn't deduct TDS, government is at loss, na? See, you might not purposely ignore TDS, but sometimes, because of ignorance. See, I am giving you the deep knowledge by explaining, dear student, works means someone doing the work as per my requirement. So a true person who understands the concept, he will understand advertisement is subject to TDS. But imagine a layman like Pepsi's and big companies, when they spend on advertisement, they don't have that much knowledge. So they might miss the TDS. That's why law has specifically given. But see, in all the examples, the logic is same. Because these are transactions of high value. In ABC Jal, what reasoning I will give? Because these are transactions of high value, government doesn't want to take chance. Even though after I tell you the full form, you will not find any new knowledge. Same thing I will be repeating. Someone is working as per my requirement specification. But since these are transactions of high value, for safety purpose, it is specifically given in the law so that no one should miss TDS. See, when it specifically comes, everyone knows, oh, advertisement is there in the law, so I will deduct TDS. No one forgets. Next alphabet, broadcasting, telecasting. Broadcasting, telecasting. Like, see, for example, I have done some shooting of TV serial, like Balaji Telefilms. Balaji Telefilms has done the shooting of TV serial. Now, after doing the shooting, what they do? They want to show TV serial on some channel. So they will contact channel like Colors Channel, Sony Live. So imagine Balaji Telefilms is the production company. They have produced what? A TV serial. Now they will enter into a contract with Colors Channel. And you know what Balaji will tell Colors Channel? You have to show our TV serial every day at 8 p.m. So they will show every day. Or if they say, you have to show our TV serial only on weekends. So it will come only on weekends. Means Colors will do the work as per the requirement of Balaji Telefilms. So this is also works contract. And this is a contract of broadcasting. See, shooting was done. Now it is broadcasted on a TV channel. Okay. In short, this is just an example. But here also, the theme is what? Balaji, whatever production they have done, it will be displayed on Colors Channel as per the requirement and specification. Okay, tell me, what if it happens like this? Look here, look. Balaji Telefilms, look. They have produced a TV serial. Now they have given full TV serial right to Colors. You know what they have told? Colors, this is a TV serial we have done the shooting for. You keep with you. You want to show on your channel. So, don't want to show, don't show, do whatever you want, it's your property now. Then, Colors Channel will not work as per my requirement. Then it is royalty transaction. Then Balaji will say, these are our shooting material, television serial shooting. You keep the rights, you pay us royalty. Then royalty comes under 194J. Partner director, remember? In exam they tested like this. And see, you can catch this point, when you will repeatedly listen to what I am saying. Someone should do the work as per my requirement. Then and only then it's a works contract. See, if you by heart the examples, your brain will not work. Understand the funda. So tell me, same example can become royalty also. Same can become works contract also. So can you repeat how it will be a works contract? When after doing the shooting, I am not giving them rights. I am telling them display my serial on your channel on whichever day I want, on at whatever time I want, as per my requirement specification. Then it's a works contract. Precisely broadcasting, telecasting. But if television shooting is done and that whole shooting rights are given to them, whether they want to display, they don't want to display, whatever you want to do, you give us our money. You give us our money. Then it is royalty transaction. And on royalty transaction also there is TDS, but 194J. But you know here who will make payment to whom? Colors will pay royalty to Balaji and TDS will be deducted. But in the first example, when Balaji says, show our serial on your channel on so and so day, on so and so this, we will give you charges, Then Balaji will cut TDS for colors, works contract. Okay. In short, see, best way to remember is, if in the transaction you can feel that someone is doing the work as per my requirement specification, then it's a works contract. See, you might sound, this I repeated so many times, but trust me, this has always been a matter of court case. And based on so many years of experience, I have seen so many cases, and the crux of all cases what? If it can be proved that someone has done the work as per my requirement specification, it becomes a works contract. Then see, next is what? In ABC Jal, see, catering. Catering, for example, I give you a party. After you become a chartered accountant, I throw a big party and I book a banquet hall. And in banquet hall, when I invite you, obviously I will make arrangement for food. So for food, I have hired a caterer. So now what caterer will do? He will cook anything for you, or he will cook as per my requirement. Obviously, he will cook as per my requirement. If I say my students want samosa, my students want Mexican, my students want Chinese, so he'll do that cooking only. So caterer will cook the food as per my requirement specification. So even this is a works contract. You know why I took an example of party given to students? If I would have taken example of my son's marriage, it becomes a personal transaction which is exempt from TDS. You forgot today only I taught you this thing. See this? Didn't I teach you today? Personal transaction, no TDS under 194C and J. And currently which section I am doing? See? So see how smart I am? While giving the example, I didn't take example of my son's marriage. I took an example of given party to my students. And if I give party to my students party is a business function for me. And their payment to caterer will be subject to works contract TDS. There is one more C, carriage of goods and passenger. Means imagine you are a transporter and you have to do the work of transportation. Tell me how come it's a works contract? Because transporter will transport the goods as per my requirement specification. He will not throw the goods anywhere he wants. He will take the truck from Mumbai to Hyderabad. If I tell Hyderabad, if I say Ahmedabad, he will go to Ahmedabad. He will transport as per my requirement. So this becomes again a works contract. But see, you didn't listen carefully. What was the full form of C? Carriage of goods and passenger. Passenger transport contract is also works contract. You know what example I can give for passenger transport? Look, I have hired a bus company to pick up and drop my employees. I am a big company. I have got lakhs of employees working under me. And for the pick up and drop of my employees, there is a bus service. So tell me, will bus service do the work as per their wish or as per my requirement? As per my requirement means my requirement says my employee stays 10 kilometers away, pick him from there. So bus will have to pick him from there. And if my office is in Church Gate, so they have to drop in Church Gate. So buses will be doing what? They will do the job of picking up and dropping the employees as per the requirement of company. So then it becomes a works contract. But here it is carriage of goods or passengers. It can also be in case of school buses. Schools also, they hire buses to pick up and drop the school children. Now tell me, if you understood, answer this. What is the full form of C? Carriage of, first C was catering. What is second C? Carriage of goods and passenger. Okay, answer. A company has booked 5 flight tickets of the directors Mumbai to Singapore, will company deduct TDS? Students who study mechanically, they feel, yes, you said na carriage of goods and passenger. So in Indigo Airlines, passengers will be carried. So these students are simply mugging up. What did I say? Works contract means someone has to work as per my requirement. So tell me, if I book 5 tickets for my directors from Singapore to Mumbai, will Indigo Airline take off and land as per my requirement? I say, come on Indigo, take off. Wait, take a pause. Now start. Now land. So they will not do takeoff and landing as per my requirement. It's a general airlines. So many people travel in Indigo Airlines. My directors have booked the ticket, but they will operate as per the standard timing of departure and arrival. Yes, if I charter a plane specially for traveling of my directors, then the chartered plane will operate as per my requirement. Then it's works contract. See, I am talking in different methods, but after all I am conveying the same message. What? But see, this requires repetition, because I have seen people making blunders here. In my past teaching, many students have asked me this doubt. Sir, company booking the flight tickets for director, will TDS come? I get shocked when students ask me the doubt. I feel then what they are listening to me. When I am explaining, I am repeatedly hammering on one thing, that only when someone is working as per my requirement, then only it's a works contract. No? You cannot just, directors are passenger, they are carried by Indigo. It's a carriage of passenger, but not as per my requirement. No? See, in ABC JAL, the law has said advertisement, broadcasting, blah, blah, blah. But everywhere there is some implied thing, as per my requirement and specification. Once again, tell me, what is this C? Second C, carriage of goods and passenger. Now see, exact version was carriage of goods and passenger by any mode except railways. Means if you get your goods transported through railways, even though it's as per your requirement and specification, TDS will not apply, because railways belongs to Government of India, and Government of India will say, now you are becoming so big that you will deduct our TDS. You people are cheater. You should be given net of TDS. But when you are dealing with railways, railways is belonging to government. And if government is getting some revenue, they will pay tax. See, government also, when they make income, they have to contribute to income tax of India. Na? So since when you are dealing with railway, don't forget the other party is Indian Railways, which belongs to Government of India. So they will honestly pay their share of tax. So no need to deduct TDS. So in the question they can say, company booked one bogie in the train for transporting the goods to Surat as per their requirement, blah, blah, blah. They will create an atmosphere of as per their requirement, blah, blah, blah. But don't get carried away. The moment you see it's railway, no TDS. Tell me, what is the full form of ABC? Advertisement, broadcasting and telecasting, catering, carriage of goods and passenger by any mode of transport except railways. J for job work. J for job work. Now see, this point is little important. Huh? See, in job work, what happens? Someone is manufacturing goods for me. See, up till now in all my examples, someone was providing me service. Advertisement, broadcasting, transportation, they were all service. Now, someone is making goods for me as per my requirement specification. That is called job work. Like see, let me explain with example, because there are so many minute points here. Huh? See, imagine I am into the business of saris. My brand is Prime Saris. Just an example. Huh? I sell designer saris. Many celebrities, big shot people, they wear my brand Prime Saris. Okay. Now see, since my brand has become so famous, Prime Saris, Ambani's, everyone come to my shop and they buy my saris. One sari is costing, how much? 5 lakhs, 10 lakhs. Such a big brand I have made. But initially when I made the brand, I myself was designing the sari. Embroidery, I am doing embroidery. Huh? So I myself was doing, because initial days I was doing the work. But now I'm getting so many orders of sari every day of big celebrities. I don't have time. So you know what I do? I give it to the job worker. Means I have hired someone. I told someone, see, job worker, I will supply the fabric. This is fabric, fabric. I will supply him fabric and I will tell him, see, this is the fabric. On this, you have to do so and so embroidery, so and so paint, so and so design, and just do the work for me. You know why I'm passing out the work? Because I am super busy now. So, this is job work. And here, when I make the payment to the job worker, I will deduct TDS. But here there are two conditions. Fabric, I should supply. Design specification, I should specify. Both the conditions should be satisfied. Who am I? I am the owner of Prime Sarees. And I have hired some job worker. When it will become works contract, what are the two conditions? I should supply the fabric also, plus specification should also be mine. Specification means how much embroidery I want, what type of paint I want, what thread I want to use for stitching. Everything I will specify, plus fabric also I should give. That means what, if that job worker gets the fabric from outside and is simply doing the designing as per me, then it is not a works contract. You know why? Because here someone is doing the work, but what is the type of work? Goods. The identity of goods is from the material. So only if I provide my material, it becomes works contract. Because see, don't forget, I am getting the saris manufactured by someone. So sari is a service thing or product. It's a product. And identity of product is what? The material. Like see, this is a product, it has a material. Every product has a raw material. Na? So that raw material should also be mine. Plus designing should also be as per mine. Then only it becomes a works contract. And generally, if I don't want to affect my brand, obviously I will supply the fabric. Because you didn't understand my example, I am branded Prime Sarees. Ambani's, big celebrities, Katrina Kaif, they purchase sari from my shop. So I am very conscious about my brand. So obviously, if I hand over the work to job worker, will I give him the freedom of purchasing the fabric from anywhere? What if he purchases a cheap fabric? The reputation of my Prime Sarees will be spoiled. So generally, in true job work, people what they do, they supply their own material. Because see, in every product, if the material is poor, the product will become poor. And job work situation arises when you become too famous. You yourself are not able to do. You have to pass on the work. So that passing of the work should be having two conditions. Condition 1, our material. Condition 2, our specification. Then when he manufactures the goods for me, it becomes a works contract. Tell me here, who will make payment to whom? Prime Sarees will make payment to the job worker. And when I make the payment to the job worker, I will deduct TDS. If single payment more than 30,000 or aggregate payment more than 1 lakh, if the job worker is individual HUF 1%, other is 2%. This all is same. But TDS will come because it's a works contract provided both the conditions are satisfied. The best way to remember, you know what? There are two types of work. Service, goods. If someone is purely giving me services, then there is only one condition. He should give me the service as per my requirement. It automatically becomes a works contract. But if someone is giving me goods, then the goods should be manufactured as per my requirement, plus material should also be mine. See, I hope you can make that chart. How is the chart? Work done can be goods, service. Fill the chart now. If the work done by someone is service, like advertisement, broadcasting, they were what? Cooking the food, they were service transaction. No? So if service transaction is there, it becomes works contract the moment you feel, oh, someone is doing as per our requirement, enough to call it as works contract. But if someone manufactures goods for me, then the identity of goods is the material inside. So what is the condition? It should be our material plus our specification, then only it's a works contract. Now see, here people do cheating. Like see, continue the same example. Prime Sarees told a job worker, see, my sarees, designer sarees are very branded, don't spoil my brand. I will give you the fabric. Use this fabric only. Huh? Otherwise, if you take some cheap fabric, my brand will be spoiled. So I told him, use my fabric. And design also, I provided him. Okay. But now what job worker said, but sir, then you will deduct TDS. Please don't deduct TDS. He was begging. Begging for what? Shirish sir, Prime Salaries owner, please don't deduct TDS. So I said, TDS will come. If I don't deduct TDS, I will be in trouble. Because TDS is the headache of the payer. But then I told, okay, do one thing. You want that TDS should not come? I gave him an idea. You know what idea I gave him? This fabric I will not supply. Because if material is also mine, specification also mine, then it will become works contract. Then I have to deduct TDS. But I want to avoid TDS for my friend. He is my friend. You know what idea I gave him? I told him, see, don't buy the fabric from me. You buy the fabric from my brother. I trust my brother because my brother has got good quality of fabric. You purchase the fabric from him. And then we will show government that I didn't supply the fabric. I just gave him the instruction of how to do the embroidery. You know why I am doing this cheating? To avoid TDS. But government says we are not a fool. Listen to our rule. That even if the fabric is provided by Shirish's relative, it is still covered in works contract. So what is the final version of the law? Whether Shirish gives the fabric or his relative gives him the fabric, it's one and the same. But tell me, still I can do the cheating. I can tell job worker, take the fabric from some non-relative. But this I will not prefer, na? Because that non-related party, what if he gives a cheap fabric and just to save his TDS, I cannot take that chance, na? Means in short, still cheating can be done. But you will be trapped if government comes to know, Shirish, your fabric or your relative's fabric and specification is also yours. Then it's a works contract. TDS will come. In short, see what is the final definition of job work? Read. Job work means someone is manufacturing the goods as per material supplied by the assessee or his relative according to the specification of assessee. You heard carefully. Material supplied by assessee or his relative plus specification of the assessee. If that thing is done, then it's a job work, and once it's a job work, it falls in the definition of works contract. TDS will come. Last point, L. L, contract for supply of labor. What is contract for supply of labor? See here, imagine I am running a factory. Every day I need some workers. I don't keep hunting the workers. What I do, look, I give a call to one agency. Hello, agency, I need 20 factory workers. At one call, I will get 20 factory workers. What is happening here? That agency is supplying me labor. So what that agency will do? They will immediately give me 20 workers, but I have to pay them charges. And that charges is also subject to TDS. Because the charge I have given for what? For supply of labor. And even that's a works contract. And why works contract? Because he is working as per my requirement. If I say I want 20 workers, he will not give me 10 watchmen. I want 20 worker means 20. And worker, not watchman and not 10. In short, sometimes you have an agency with whom you have a tie-up. At your one call, they will supply you the labor. Labor can be factory worker, security guard, whatever. So see, here TDS will come for what? For the charges paid by me to that agency. See, when the workers come, the wages given to them is different. They are in the nature of salary. But to that agency, what I have to give? Charges. Because at my one call, they gave me the labor. Na? So that charges will be subject to TDS. Because that charges is for, they are working as per my requirement. Whenever I call them, they supply me worker. See why I have written etc. In the act, they have not written etc. In the act, they have used the word includes. In the legal language, the word includes means what? This list is illustrative. It is not exhausted here. But see, people don't understand. So for simplicity, I have added my own etc. Etc. means what? Are these the only transactions subject to TDS or there can be many more? There can be many more. Every transaction where someone is doing the work as per my requirement specification can be works contract ABC Jal is just an illustration. And why these illustration government has given? Because I told you these are high value transactions. Government doesn't want to take chance. If someone forgets TDS, then tell me what was C in ABC Jal? One was catering. What was second? Carriage of goods and passenger. Na? Carriage of goods. If the goods are carried by my transporter and if the transporter does not have more than 10 trucks, I will not deduct TDS. Means I have a transporter, he doesn't own more than 10 trucks. And if he transports the goods for me, whatever payment I make, it is free from TDS. Because you know, in PGBP, I told you people having 10 trucks, they follow presumptive taxation. In presumptive taxation, everything is good only. What is good in presumptive? Transporter has to file the return where he has to show the income of 7,500 per month per vehicle. Little bit of income he has to show. So one more attraction. For such people, TDS will not be deducted. This is one added advantage. See, government is encouraging presumptive. You remember presumptive taxation or not? That was precisely under which section? 44. A transporter having up to 10 trucks, he is not required to prepare detailed income statement. His income is 7,500 per month per vehicle. And to encourage that thing, government is saying for such people, no need to deduct TDS. They will like it. Because anyways, with such people, government doesn't have doubt because under presumptive, he is anyways going to declare the income. So TDS is not applicable. But wait, there is a condition. I will have to tell the transporter, give me your PAN number and give me a declaration where you will mention that you have got so many trucks. Two conditions are there. I should take his PAN number and I should take a declaration stating that how many trucks he has got. This who will do? I will do. Because see, tomorrow if I don't deduct TDS, government will hold my neck. And if I say, I didn't deduct TDS because he has got only up to 10 trucks, I might be lying. I might be a liar, na? Who knows he has got up to 10 trucks only? I will always lie. So I have to tell the transporter, you write and give me that you have got 6 trucks or 7 trucks or 8 trucks. You write and give me. Because if government does inquiry on me, I can show, see, he has written and I should take his PAN number also. Because PAN number creates the identity of that person. See, for example, there is an inquiry on me and if I have not deducted TDS, I can always lie, na? Yes, there was some Mr. Sharma. He is not having more than 10 trucks. That's why I didn't deduct TDS. So now government will say, who is Mr. Sharma? There are so many Mr. Sharmas in India. Which Mr. Sharma? So how will I prove he is my Sharma? So I will have to take his PAN because government does not identify people with Mr. Sharma or Mr. Mishra or Mr. Iyer. They identify people from their PAN. So in short, if I want to safeguard myself, what I should do? First, I should get it in writing from him that write on a paper that you have got so many trucks and give your PAN also. Because your name government doesn't know. Your PAN government can identify you. Okay. Finally, this you have to remember. Look. See, this is me, Shirish Vyas. And this is the transporter. Transporter should have how many trucks? Up to 10 trucks. And from the transporter, I have to receive 2 things. What? PAN and declaration. Then, no need to deduct TDS. Okay. So, these were the 2 points. But see, in 194C, along with 2 points, there is one extra note. Note type of point. See this. Try on your own. First, let me show the example. The example is like this. I am into a coaching class business, you know. You know your sir, na, Shirish, coaching class. Okay. So imagine I am constructing a new classroom. And that classroom work is done by Mr. Dilip. See, Mr. Dilip. So tell me, when a new classroom is made for me, isn't it a works contract? Because classroom will be made as per my... See, whenever I give any example, don't think the name of the example. See, requirement specification. So if Mr. Dilip will make a classroom for me, it's a works contract only, na? Because he will make the classroom as per my requirement specification. If I say in my classroom I want yellow paint, he will put yellow paint only, na? He will not say, no, yellow will not look good, it will look ugly. I want yellow. So he will do the work as per my requirement. So it's a works contract. Now, assume classroom work is done. He has given me a bill. See his bill. This is a bill for classroom work done. Towards material, he has quoted 1 lakh. Labor, etc., 2 lakhs. Total bill, 3 lakhs. Plus GST. Nowadays, most of the bill, there is GST also. So this is the amount which Shirish Vyas has to pay to Dilip. And it's a payment for works contract. Okay. So now tell me TDS will come on which amount? See, 3 lakhs is without GST. With the GST, it will be a bigger amount. So see, TDS will come or not, that is not a question. That you know, na, if I make payment for works contract, TDS will come. Single payment more than 30 aggregate, all that condition is satisfied. But my question is what? Will I deduct TDS on amount without TDS, amount without GST or with the GST? It should be without GST. Because GST itself is a tax. So you should not mix GST in TDS. So ignore the GST component. But that is provided in the bill, it is specifically mentioned. So imagine if Mr. Dilip gives me a bill where GST is not separately mentioned. Then I will cut TDS on the whole amount. If the GST is kept implied, then implied, I don't understand implied. Then I will cut on full amount. But if it is expressly specified in the bill plus GST, then ignore GST, TDS will come on basic amount. Plus material amount also I will ignore. And TDS will finally come only on labor, etc. Why? In the act they have written, when the bill of the contractor comes, and if in the bill material is specifically given, exclude the value of material, and on the balance bill TDS has to be cut, deducted. Why? Can you tell me in my example, what should be there in the material? My example is someone is making a coaching classroom for me. So tell me in classroom, he might have used paint boxes, Asian paints, narrow leg paints, Berger paints, cement, sand, bricks. So tell me why these items are to be excluded? Because these are ready product. Even if I would have gone to a shop to buy a box of Asian paint, I could have got it. So in that, what Dilip has done for me? Works means you work for me. Paint box is a ready box, ready dabba, available in the market. It is just, I didn't want the headache of going in the market and purchasing Asian paint, narrow leg paint. I handed over everything to Mr. Dilip. But in this material, Dilip is not doing any work. See, feel the word, TDS is on work contract. If someone has done work, then TDS will be applicable. But getting Asian paints, box, bricks, cement, these are what? Here is Dilip doing some special efforts, or these are ready products available in the market? These are ready products available in the market, which I could also have bought it. And I could have given, see, this is paint, cement, what else you want? Bricks, take the bricks, do the work. Transaction is for works, na? So that's why law says ignore the material value, because materials are nothing but the standard products available in the market which will not be subject to TDS. Yes. Apart from material, whether it is labor, XYZ, see, etc. means don't buy at labor. It can be any other charges of Mr. Dilip, but not the charge towards material which are readily available in open market. Exclude that and TDS will be deducted. This was an important point. Now, try this version, new version. This is second example. Same thing. Imagine there was a coaching class, one classroom was being constructed for me by Mr. Dilip. But you know, here Dilip has a different style of billing me. You know what Mr. Dilip said? Sir, I will make the classroom for you. But your classroom is measuring 1000 square feet. Imagine the area of my classroom is 1000 square feet. And he said, for every square feet, my charge is 300. You know, sometimes contractor prefer this style of charging because here no one can bargain, na? See, in this style of billing, smart people will say what? For material, how come 1 lakh? I have also seen the market, paint boxes, cement, sand, bricks. I know the prices. People will start bargaining. That's why nowadays contractors, what they do? They make the bill like this. Depending upon the area on which they do the work, per square feet they charge. So now tell me, how will I calculate TDS? See, first, what about the GST component? That I've already said, GST component should be ignored in TDS. So what is the amount now ignoring GST? 3 lakhs. But here, can I figure out the value of material separately? So full 3 lakhs will be subject to TDS, full 3 lakhs. It is the bad luck of Mr. Dilip. Why Mr. Dilip? Because I will deduct TDS from 3 lakhs now. If he would have given me the bill like this, I would have deducted the TDS only on the 2 lakhs amount. Huh? So in short, see, that is Mr. Dilip's problem, how he gives me the bill. What is my duty as a payer? If I get a bill in which material value is specifically given, I will ignore that and I will deduct TDS on the balance amount. But if a bill which I am getting, it doesn't have material value specifically given, then whole amount will be subject to TDS. But in any case, please don't consider the GST component. Okay. See, this GST component you would ignore, this point you generalize. Huh? Although the timing of the explanation is works contract. But don't think that in works contract only GST part should be skipped. General rule. Even in 194J, when chartered accountant gives the bill, lawyer gives the bill, it might have GST. Generalize. Whenever the bill has GST component, ignore it. This is a general thumb rule, okay? Yes, in works contract, what is the additional point I said? That if the works contractor bill has got material specifically given, like in my coaching class example, paint boxes, cement, bricks, etc. It is specifically mentioned, then ignore it. TDS will come on balance. But if not specifically given, TDS will come on the whole amount. Okay. Don't lose the link. Huh? See, whenever I finish one point, you have to go back to this chart. Tell me, where have we reached? We have finished this 2 dots of works contract and 1 note. What was that in the note? That bill example. So see, I will put dark circle, dark circle, dark circle, dark circle, dark circle on the first point. What was the first point? ABC Jal. Then what was the second dark circle? Transporter having up to 10 trucks. If he gives his PAN and declaration, no TDS. And note was that example of bill, Dilip Works. Okay. So till here we have done. Till here we have done. Okay.